Good morning and welcome to Wellington's 2016 results conference call. I'm Howard Milliner, Wellington's CFO. Last week we released our audited financial statements for the 2016 year. I'll make some additional comments on the performance for the year and the position as at 31 December. Greg will then provide an update on the business as we progress through Q1 2017. There certainly is a lot happening. I must start with the usual warning. We'll be making forward-looking statements on the call today. As these are predictive in nature, they're subject to a number of risks and uncertainties relating to Wellington, its operations, and the markets in which it competes, some of which are beyond our control. Actual results and conditions may differ materially from those expressed or implied by such forward-looking statements. The result for 2016 was an EBITDA profit of $204,000, a $1.6 million improvement compared to 2015. If EBITDA is adjusted as we do to remove the impact of FX revaluations on the preference shares, then EBITDA was $325,000, a $2.3 million improvement on the previous year. Revenue in New Zealand dollar terms was up 43% to $35.3 million. In US dollar terms, it was up 40% to US $24.4 million. We sold 33% more EC motors than in 2015, including 98,000 of the new ECR2 motor. In 2016, we sold 52,000 SCF Connect units for installation in bottle coolers for a major beverage brand. Almost all of these SCF Connect sales included hardware and 5 years of data access. Gross margin improved again to 24.4% from 22.2% in 2015. Some of this improvement can be attributed to higher margin new products, but cost reductions were achieved for legacy products as well. We saw a US $1 reduction in average unit cost for ECR01 and ECR8292 models year on year. Operating costs increased in 2016 largely as a result of adding the skills needed to support the new products. Headcount increased by 10 year on year. Our new SCF Connect product is driving this, so the headcount increase has been driven by growth and the increasing complexity of new customer relationships. Revenue per employee increased from $450,000 per employee to $588,000 this year. So growth helped productivity also. I should comment on the balance sheet and Wellington's funding. The preference shares and Superlife loan facility are classified as current liabilities on the balance sheet because they are due for repayment in 2017. The preference shares convert into ordinary shares, so that's not an issue as no cash is involved. Superlife debt facility expires in September 2017. The company is talking to New Zealand trading banks to secure bank finance and is also exploring other financing options to support revenue growth and future product development. In the event that additional funding is not secured, the company is confident that it could meet its debt obligations out of forecast trading cash flows. Our auditor agreed with this position, but clearly there is always a risk in any forecast. The emphasis of matter audit opinion is not unusual in these circumstances. We continue to manage working capital very closely. We've reduced the average debtor days to 65 days from 79 in 2015 and have turned inventory 7 times, up from 5 times in 2015. Suppliers' terms are currently 90 days, so revenue growth is generally positive for short-term cash because if we supply customers ex-factory, then they pay us before we pay suppliers. There are sometimes timing issues with customer payments, and particularly large production quarters do impact cash balances, such as what occurred in Q4 when we sought short-term debt support from Superlife. Thanks, everyone, and at this point I'll hand the call over to Greg to update you on how 2017 has looked.
Thanks, Howard. Hi, everyone. I'm going to talk a bit about our operating performance, but mainly about our strategic progress last year and early into this year. And I'll also dive into the partnership announcement we just made in the last hour for those of you who have seen that. So first, last year, we had a great year, one the team's very proud of. The work's not yet done, but a second year in a row of 30 to 40% growth and then better than EBITDA break-even. As Howard mentioned, a small EBITDA profit of $325,000 was a milestone for the business. The company sold a record 1.4 million motors in 2016, including 1.2 million EC motors, which was a 33% increase on the previous year. particular note was the increased demand for our legacy ECR92 product, which is a low-cost and simple-to-use EC motor product. We are seeing bottle cooler customers increase their preference for motor cost performance, which is why we believe the sales of this motor increased. Gross margin was up from the 21.4% in the previous year to almost 25%. Price competition on motors continues to be strong, however, and the full volume effect of higher margin products not flowing through yet. So we think we can improve on that 24.4% a little in 2017. We continue to look for ways to reduce costs with all our major suppliers, and we are seeing some component pricing benefits from the increased volume. We don't think we'll be taking large chunks of cost out of our motors going forward, as we have done in the past. Rather, it will be small incremental cost reduction, as most of the major gains have been made. It's really now all about volume and efficiency in our supply base. Moving on to new customers. We had a very exciting year last year adding new customers for our new products and our existing products. 15 new customers were added globally in 2016, and 2 of these customers were attracted by our SCS Connect platform. Many of the customers we added last year were focused in the supermarket display case and food service market as we expand beyond our traditional beverage market and continue to diversify the business. In our regions, Latin America grew by 44% versus 2015. EC motor volumes grew by 30% in that region. Mexico continues to be our largest market, but we have several major customers beginning to adopt SCS outside of Mexico, particularly in Central America. In the USA and Canada, we grew by a massive 130% versus 2015, with $2.2 million of revenue compared to the previous $1 million in the last year. 2 new customers for the ECR2 motor product started last year. Our local partner East West also started winning customers for ECR2. We're continuing with several SCS field trials in the USA, although that is a region where it is becoming evident that the adoption rate for SCS may take longer than in other regions. In Asia Pacific, we grew by 9% year over year. 8 new customers were added in that region, 2 for SCS and the balance for EC motors. And those EC motor customers were smaller Chinese supermarket display case manufacturers. In Europe, revenues grew by 17% to $3.2 million, and this growth was mainly related to 3 new customer wins, specifically a large new Italian customer, one at the end of 2015, was shipping throughout 2016. On the product and solutions front, last year we launched the SCS Connect refrigeration controller and our ECR2 motor, and both of these products experienced strong sales in the year. We continue to prioritize the expansion of the SCS Connect platform as customers provide us feedback on software and hardware enhancements. I should add a bit of color on the evolution of our SCS Connect strategy. We've started working on new plans to add further value to customers through new wireless communication technologies, new cloud software services, and digital solutions. Our SCS Connect platform is all about making a cooler smarter and helping our customers engage with consumers and sell more of their product. So one of the areas we're focused on is searching for partnerships that can add software and services to our SCS Connect solution. This will initially be focused in the digital marketing and merchandising space, but we're also looking at broadening our hardware offering to add features to our products. To that end, in the last hour, we made an announcement to the markets on a collaboration with a company called iProximity. This is an Australian-based proximity marketing solutions and consumer location intelligence company. It's a very exciting development in our strategy. This new partnership will be focused on producing our new smarter cooler platform by adding iProximity's powerful contextual marketing technology to our existing SCS Connect system, which is already obviously being sold. This gives our customers the ability to move from a simple consumer activation through our wireless device to true customer engagement. Commercial refrigeration systems in the field, fitted with our SCS Connect controller, already lead the way in smart cooler tech. Our smarter cooler concept combines our system with iProximity's proprietary IPX beacon management platform and their other micro-location and digital marketing tools to engage with and interact with consumers at the point of sale in front of the cooler. The two founders of iProximity, David Burden and Rowan Lean, are based in Melbourne, Australia, and we're very pleased to have them to be the first cog in our solutions partner network. Moving to the motor side, I've already talked about the ECR2 motor sales growing quickly in 2016. We're also working on expanding into other ECR2 options. That includes various fan solutions for our customers and planning for the development of a higher powered version of ECR2, which will open up even more higher end product in the supermarket display and food service segments. So finally to our outlook for 2017. First quarter, which we're in now, looking very busy and quite strong. Although as usual, customers are moving demand around a lot between first quarter and second quarter. We do expect, however, continued growth in the first quarter of this year and a positive EBITDA result. Our strategy to expand the motor product range and further develop the SCS Connect platform will continue at pace. To support that, we will continue to add new skills in the software development, sales leadership, and customer support areas. We envisage adding between 6 and 12 new people in 2017. Of course, this will be dependent on how fast the new products are adopted, and as always, with an eye on cost. Our early estimates for this year, 2017, indicate the company can achieve its revenue growth targets of between 30 and 40%, and we continue to expect an EBITDA profit in the low millions of dollars. An interesting assessment of our forecast cost structure would show that an EBITDA of around $2 million this year would deliver an approximate break-even net profit. It's not all plain sailing. Of course, we remain worried about the ongoing economic uncertainty in parts of the world and developing uncertainties around trade agreements between the US and several countries where we do business. Our overall market share is growing, however, and demand for new products is strong, but our opinion is there will continue to be macroeconomic and geopolitical headwinds that could impact our business going forward. Look, I wanted to finish just leaving you with a theme from my recent interview with the National Business Review in New Zealand. I was asked by a reporter what's next for Wellington, and my reply was as follows. We haven't asked shareholders for any equity investment for a couple of years now. I feel like the more profitable we get, the more we are self-funding. I'm not even thinking about capital needs right now. I've been in Wellington for a little over 5 years, and last year was the first year I wasn't focused on turnaround activity. We delivered $35 million in revenue last year, and I'm getting the team's head around $50 million of sales as the next milestone, and then how to get to $100 million of sales in the next 5 years. Of course, that's going to take more products, new strategic partnerships, investment in customer-facing and technical skills, and our continued myopic focus on cost and execution. We're already working on some of those next products and partnerships, like iProximity, but we don't need more money to develop them. There's still a lot of work to do, however, but we're not stopping too much to congratulate ourselves on last year. Everyone's thinking about how we double revenue again, which we all think would be a seriously profitable business and actually a really cool business. Our loyal shareholders have been a big part of our journey so far, and we look forward to another positive year in 2017. So thanks everyone for listening to our comments, and we'll hand it over to questions. Operator.
Yes, thank you. If you'd like to ask a question, please signal by pressing *1 on your telephone keypad. If you're using a speakerphone, please make sure the mute function is turned off to allow your signal to reach our equipment. Again, press star 1 to ask a question, and we'll pause for just a moment to allow everyone an opportunity to signal for a question. And again, that is star 1 if you wish to ask a question. And we have no questions in the queue at this time.
Wow. No one wants to know about the eye proximity announcement. Maybe you haven't read it yet. Give them one more turn at looking for questions, Lisa. I'm hoping.
And again, as a reminder, that is star 1 if you wish to ask a question. And we'll take a question from Andrew Mortimer with Eastbourne Advisory.
Hey, Andrew.
Mr. Mortimer, perhaps your line is on mute. Mr. Mortimer, perhaps your line is on mute. Perhaps pick up your handset or press your mute button.
Can you hear me?
Yes, we do.
Hello. Hello.
Hi,
Sorry about that. Hey, look, I'm just interested. So the new technology, how does that actually integrate with iBeacon? I'm not quite clear. Does it replace it, or does it assist it? How exactly does that technology work or integrate with iBeacon?
Yeah, it's a great question, Andrew. So our SCS Connect hardware has inside it an iBeacon, which is the radio transmitter, the Bluetooth transmitter, and the software protocols around how that iBeacon transceiver actually works, both internally and with the outside world. So there's the iBeacon hardware, which sits in our device. Already in every single SCS Connect we install in the market comes iBeacon enabled. What the iProximity partnership does is it adds various layers of software around our device that access that iBeacon, and through that software can engage in various ways with the consumer. So whether it be marketing campaigns that the brand may wish to communicate with a consumer, it could be consumer purchasing behavior that the brands wish to collect. Obviously, consumers need to have the brand's app installed on their mobile device in order to access the beacon. So our solution has the software that, the hardware and the software that actually enables a beacon in a cooler, and the iProximity partnership adds all the software and services around consumer engagement.
Okay, thanks very much. And just a very quick one. That's great. Just one other quick. I missed how many SCS controllers you said you'd actually sold for FY16.
52,000.
It was 52,000. Okay, thanks. 52. That's all from me.
Thanks, Andrew. I would add, just as you've gone offline, Andrew, that partnership with iProximity is really in line with our strategy to be more than just a hardware company.
Yeah, sure.
Investors may have heard me talk about Beyond the Motor several years ago. Well, we're kind of more getting beyond hardware now. I mean, we're not a SaaS company. We believe that hardware is a platform around which we develop software and services to help our customers grow. So, we're not getting rid of hardware. We're developing more hardware, and we're developing software around that hardware, and we're looking for a partner network to help us with the software and the services, because we can't develop everything ourselves. We wouldn't dream of doing that, but there's some good companies out there that can help us do that.
Okay, so thanks for that, guys.
We'll go next to Grant Taylor with Tene Nui.
Greg, when you talk about iProximity, what's the financial arrangement? Can you talk us through how are you going to sell them as a bolt-on platform that can be sold to the customer, or what's the strategy for this?
Yeah, look, there's a couple of parts to the agreement. It's not a joint venture or any sort of financial partnership in that nature, Grant, but we're effectively reselling their software and services through our device. So you would imagine Wellington's SCS Connect with digital marketing solutions powered by iProximity. So they sit behind our box. We own the customer relationship. We own the marketing and sales of the entire solution. In some cases, we may take the iProximity team into customer engagement to get them enabled, to educate them. But they really are a solutions provider to us, and it's it's a reseller agreement plus, I would say, Grant. There is some joint marketing collaboration in there, maybe some co-branding of that particular solution. But it's a pretty simple agreement and enables us to go and really just market and utilize their services.
Okay. If I may ask a second question, how big is? Can you give us a little bit more background on iProximity? How big are they? How many people do they employ? How long have they been in business?
It's quite a small private company. They've been in business for 6 or 7 years, I believe, run by 2 founders out of Melbourne. It's a classic software development company. Most of their development resources are outsourced, so they act as software developers. Their core IP is developed in-house, but all the kind of app development, et cetera, is done through providers, either in Australia or in other parts of the world. So it's a very capital efficient company. All the intelligence sits within the founders' heads, and one of the founders is actually is the key engineer that's done a lot of the core development. So not a big team. Again, small private company. I can't actually disclose what their numbers are because of that, but really they've got some pretty big customers in Australia. They have aspirations to take their solution global, as do we. So that's what we're doing, Grant.
Thanks.
I would add, Grant, I just remembered as you were asking that we are already trialing the solution with a number of our clients globally. So it's not a standing start. We've been, by agreement, selectively showing this solution to customers, and we have a couple of small trials underway. So that was one of the reasons we decided it was important to do a deal with these guys, because we had such a high level of interest from the customers that we're actually trialing with.
It appears there are no further questions at this time. I'll turn the call back to management for any additional closing remarks.
Listen, thanks, team, for calling in. Again, we think last year was a really important milestone in the company's journey, but it's all the growth ahead of us. Well, I guess there's still growth ahead of us. We grew a lot last year. We're excited to keep growing at the rate we were growing, hopefully this year, and deploy these new services to the market and keep putting the right numbers on the wall for our investors. So we thank you all for your support, and we look forward to updating you even further at the AGM on April the 22nd, I believe, and then through the course of this year as we deliver on our promises. Thanks, everyone.
And this does conclude today's conference call. Thank you for your participation.